Good morning to the Menace Militia. Thank you so much for coming back to the channel for another episode of Market Menace Trading. I'm Jonathan Thompson, and there is some serious things happening today. I want to do something new for you guys. So many of you are just starting your trading career, or you are entertaining the idea of considering the possibility of becoming a trader, and you may see a lot of traders online making huge amounts of money, and you may even be discouraged because of that. And I want to do something really, really cool for this channel. I have withdrawn everything except $500 from my account, because that is generally what people are going to start with. And what I'm going to do is I'm going to show you how you can successfully build a trading account using only $500. This is going to require a couple of things. Number one, you're going to have $500 that you are okay with losing, by the way. And please, small disclaimer, you probably are going to lose that $500 when you first try. Okay? I'm just being real with you. I would love to say that there's a magical indicator that you can use that is going to help you, but the truth is that I have that doesn't exist. The magical indicator is price action, and you have to learn how to interpret that, okay? But I'm going to show you that it's possible. So what you'll have to do, and again, not financial advice, but what you guys are going to have to do is you're going to have to go to an exchange. Now, I have no affiliation with them, but I really, really love using MEXC, MEXC. It's what you guys see me trade on every day. So you will have to buy Bitcoin, or get some sort of crypto, converted to Tether, USDT, and get it over to MEXC. And the reason for that is because in order to do this, you are going to have to use leverage. But I'm going to show you how you can properly manage risk and still use leverage enough to where you can make a certain amount every day. Okay. I will also build an Excel sheet. Excuse me. I will build an Excel sheet, and I will present it in the next video, showing you the compounding growth strategy that I'm going to be implementing today. Okay. So in the spirit of everything, I wanted to, do something that was more relatable. That it's easy to see, people doing trades for $400,000 or $500,000 and think, I'll never get there. But every single one of those traders had to start somewhere. So I'm going to do that from now until the end of the year. Now, I have a goal. My goal is to try to turn that $500 into $50,000 by the end of 2023. Will I reach it? I don't know. But I'm going to show you a strategy that will give you the best possible opportunity to do something like that. So I have no guarantee here, and I want you guys to be with me on that journey. It's going to be wild. So I started this morning with 500, and I'm at $666 as of right now. Now, granted, Bitcoin is having an extremely volatile day. It's actually, relative to what it's been doing, is having a very strong day. So I'm going to take you through these trades live. Well, not live, I'm recording it, but I'm going to show it to you in real time. So let's go ahead, and I'm going to trade right now. I will start breaking down the strategy, give you a brief overview of what Bitcoin's doing, and we'll make some money, hopefully. All right, here we go. Okay, big day for Bitcoin. Really, really big day. The first thing that I want to impress on everybody here, everybody that can hear the sound of my voice, when you are first starting out, your job is not to make money. Your job is to survive. And I'm talking about your first year. It's so easy to get leverage drunk or profit drunk And a good friend of mine calls it survivor bias, where you have a couple of great days. Poker players know this very well. One of the worst things that can happen to you as a poker player and as a trader is to make money by pure luck, because it will lull you into a false sense of security, and you will think, this is how it's done. I'm the man or the lady. And, you will, you end up blowing your account. That's a false sense of security. So be aware of that. Okay. So risk management is how you are going to survive. Now, remember, regardless of what your balance is, you need to make sure that you are not risking more than 2% of your usable balance on any given trade, which is going to be easier said than done more often than not, because especially if Bitcoin or whatever asset you decide to trade, I highly recommend, though, that you do start with Bitcoin if you're coming into crypto trading, because it will help you to understand the space better. Plus, Bitcoin is the largest cryptocurrency by market cap, and because of that, it is the largest market mover. Here, 1 second. Let me go ahead and adjust some risk here. Put that right there. Okay. So risk management, that is absolutely key. You are not supposed to be risking. If you are brand new, I highly recommend that you don't risk more than 1% of your balance. If you have been doing this for a little bit, you're comfortable with the interface that you're using, then I highly recommend that you keep it between 1.5 and 2%, but not more than 2% no matter what. And the reason for that is because of variance. You could vary, it's fine. Let's say you start with, $500, and your initial risk tolerance, you're allowed to risk $10 on your trade. But if you do that, let's say you have 5 or 10 bad trades in a row, and I promise you it's going to happen. Now all of a sudden you're down, 20% of your total tradable balance. Okay, so that went ahead and got stopped there. I want to explain this. I'll get into the trades here in a second, but this is key. This is really, really important for you. You have to make sure that you are obeying your own risk tolerance or your own rules, because there's no supervisor in this game. There's nobody over your shoulder. It's just you. And if you are not disciplined, this market will destroy you. It will absolutely destroy you. These rules, for those of you that have ever seen Dexter operates by a code. Okay, traders are the same way. That code is meant to keep you alive. Okay, so that is your job. All right, so understanding your risk tolerance and obeying your own rules and having that discipline is absolutely everything. Okay, I'm going to go ahead and take a trade here now, though, while I explain things further. All right, let me just go ahead and set that stop loss. Rule number 1, if you are part of the Menace Militia, and all of you are because you're here, you will never enter a trade without a stop loss immediately going into effect. Your stop loss will never be more than 2% of your entire tradable balance. You're going to make that promise to me, okay? You're going to make that promise to yourself, and you're going to stick to it too, because failing to do so will destroy you, I promise. Okay. Well, that actually went ahead and pumped right after I entered, so I will go ahead and start trying to pull some profits out of that. Rule number 2, you are not allowed to try to hit home runs on every trade. Okay? It's going to be tempting, and I guarantee you this, 90% of your bad trades are going to be good trades at some point in that trade's lifespan. Meaning you're going to enter, take the trade that I just did now. Okay, I entered here at 29,466. As of right now, it immediately pushed up, and I'm up $12.57 on that trade. It's very tempting to see a push and think to yourself, okay, well, this is probably going to explode to, 35,000 or something. And you end up having ridiculous targets that just have a very minute chance of succeeding. Take the money as it comes, okay? Take it, and I'm going to say that again. Take the money when it's there, because just like that, it can be gone. That was just perfect timing. Perfect timing. That's going to go ahead and stop, and I'm going to realize about $9 on it. Now, it's not a lot. It's not. But if I do dozens and dozens of these trades a day, each one adding about, let's say even 1% or 2 or 3% to my total tradable balance, the compounding result of that is incredible. Now, there's going to be times where you're going to see something push and you're going to get excited and you're going to want to just let it ride. Guys, I can't even tell you how much money I have watched vaporize with that mentality. And I'm not going to get specific, but I've had hundreds of thousands of dollars in unrealized gains on a single trade vaporize. And I mean that. And in the course of about 3 weeks, because I was stubborn and stupid and refused to sell, thinking, oh, it's going to come back, or, oh, it's going to keep on going. Taking that money now is everything. And I cannot stress that enough. Okay, that's interacting with the golden pocket right now, so I actually don't want to just take that at face value. There we go. That's what I wanted. There we go. Bang. As soon as you enter, instantly stop loss. Instantly. As soon as you are physically capable of getting it into your trade, you should be doing that. Now, as of right now, my balance is at $660. Okay, which means I am not allowed to risk more than $13.20 on this particular trade. So, okay, so you can see here, I'm only risking $9.70. That is well within my risk tolerance and perfectly acceptable. The next thing, look for 3-to-1 setups. Okay, so when I say a 3-to-1 or a 4-to-1, when I talk about risk tolerance or risk reward, I'm referring to this number right here, the risk/reward ratio. And you see how that says 2.7. That means I'm risking 1 part to make 2.7 parts. Okay, so a good risk reward and a standard risk reward for any trader is going to be 3-to-1. And the reason for that is because you want your profitable, good trades to be more valuable, to make more money, than your losing trades lose money. Okay? Now, if you flip a coin, let's say you flip a coin 5 times, and for every time you flip that, or every time you flip that quarter, you have to pay $1. Okay, let's say you have $5 to start with. You flip a coin 5 times and you get it wrong, you're done. All right. But, and if you are to take that same quarter and you extend that out 100 times, the law of probability states that you're going to break even 50-50. So I look at trading the same way. You're either going to be right or you're going to be wrong. And since, hopefully you're going to have on average anywhere from a 40 to a 60% accuracy rate, then it's very, very important for you to make sure that your winners are more profitable than your losers are not profitable, if that makes any sense, okay? And that will allow you to account for variance, okay? Very, very important, okay? And trading is unique in that way because it's one of the only activities you can do where you are presented with such an option, where you have the ability to do that. I'm actually within my risk tolerance to do that there. Let me think here for a second. Okay, lower low. We are having a consolidation here of sorts. I don't think that that's stemming from that, though. We'll see. Hang on. Yes, we are. Okay. So that means that will probably stop that. Okay. Yes, I'm not willing to take a larger loss than that. So this trade is for 0.44 Bitcoins. Okay, so about 45% of a Bitcoin. And I'm only using $660 to do that. That is a 20x levered trade. That's going to stop right now. Okay, so that's going to be a $10 loss on this. Okay, not terrible. And the good news is that when you're doing this strategy, yes, I'm about to take about a $12 loss, right? And I did. But my winners are north of $30 to $40, and I have dozens of them. So it allows me to take those. It basically gives me a 3-to-1 profit ratio, essentially. That's a higher low there. Higher low. As of right now, a higher low. Looking for the bullish break of structure here. Where does that put my stop? 1 second, guys. Sorry. Volume is improving. RSI is also improving. Okay. Tradable. Once again, I'm hesitating because there's a little top wick on that candle. Okay, there we go. All right, so we are in there. I will put that down to the order block here. That's 453. Okay, and there's my stop loss there. Now, yes, this is a liquidity target for sure. However, the reason that I did that and I put my stop loss there is because after I had the break here, when I pushed back down, I did not come down to test the trend line. That is a partial decline and a good indication that I will get some sort of continuation, hopefully. But this is just a game of probability, guys. That's all it is. You know, I'm doing my best to, you know, interpret market structure, price action, and, you know, make a determination. I will do a much more in-depth video on the actual trading strategy, which is the smart money concept and the ICT, which stands for inner circle trading. Okay, this is the type of trading that utilizes fair value gaps, utilizes order blocks, supply, demand zones, inducement zones, breaker blocks, things like that. Okay, points of interest, extreme points of interest. All right, basically learning how to understand price action in a way that most retail traders don't get the opportunity to, because they're inundated with the idea that most of them will start their trading career just as I did, and they will think that support and resistance and understanding support and resistance, just as far as pattern recognition, is going to be enough to make them profitable, and it's not. It is a useful tool, but it needs to be used in conjunction with a strong understanding of price action and support, and liquidity zones, area liquidity pools, areas of money, the areas where retail traders put their stop losses, put their buy orders, their sell orders, their take profits, all that. Understanding where those areas are and understanding market structure continuation is very, very important and a critical part of this strategy. Okay, so So actually, that is technically too much. So that's me breaking my rule. I'm going to correct that. 29,453. Let's see. So 17. It's very close, but I need to be exact. I'm going to trade, and I'm going to interrupt myself and give you guys like tips and tricks and all that as the day progresses. Okay, so what I'm looking at here, I can see that Bitcoin, first of all, let me zoom out on this chart just a little bit because I really want you guys to see the moves that Bitcoin has been putting in today. This is a very important part of trading, is understanding, number one, who's in control. Are the bulls in control? Are the bears in control? You know, or another way of saying that is demand in control, or is supply in control? Demand being the bulls, supply being the bears, okay? All right, so Bitcoin is putting in some really, really good structure today, going both up and down. It's actually pretty, what I would consider to be pretty easy trading. So let me show you what's got me kind of excited today is this move here going from 29.1 to 29,650, okay? Bitcoin was putting in just the most textbook moves that you could ever ask for. And I will actually show it to you right here on the 1 minute chart. We're about to get a nice bullish break of structure there. So starting here, or actually starting here, Bitcoin started, you know, chopping around, pushing up slowly, but then it had this pull down here. And what I want to show you is the reversal. So Bitcoin is pushing its way down, okay? The trend is down, meaning supply is in control. The bears were in control, okay? Over and over again, chopping around, right? Until finally, it came down and set the swing low, with this being the previous swing high. It then pushed up right through there, creating something called a change of character. Okay, that is a shift in the sentiment of the market, a shift in the market structure. Okay, that is when the price takes out the previous swing high that created the lowest point of that trend. Okay, so in this case, Bitcoin was at 29,180 and it pushed down to 29,160. Okay, that being the target. So then we pushed up, pulled back down, and got supported eventually over that market structure shift, and then had something very important happen. This is called a bullish break of structure. And a break of structure is just a fancy way of saying that the price continued the trend in whatever direction it was going. So this is a bullish break of structure. And the exact same thing is true when you're looking at a bearish continuation. Okay, that would be when the price takes out a previous swing low. Okay, and it continued to do that over and over again until it hit here. And this is a more dramatic example where it comes down and shows support over that previous bullish break of structure. Okay, creating a new swing high and a new potential target. Okay, chops around, and then does it again. Okay, over and over again, this starts to repeat. And you'll know that the structure's improving when you start seeing imbalances. Imbalance is a fancy way of saying that there's a void in the market or a fair value gap. These are outstanding places for entry. Okay, but you have to understand order blocks, and we'll get into that in a little bit. All right, so now you start pushing up. Okay, over and over again, bullish breaks of structure, over and over and over again. Okay, until finally, keeps going on, over and over and over again, keeps pushing up, until finally hitting here and kind of having a bit of a double top. Now, this is very, very important, okay? This was the previous swing low, right? Let's call it right here, okay? This is the low that preceded the swing high, okay? Hopefully everyone can see that, all right? The price pushed down, creating a fair value gap here, okay? That's a very important criteria. It must be a violent enough move that it creates a fair value gap, okay? It got supported at a previous swing low and made its way back up, okay? The first indication that you have that this is going to potentially reverse or that the bullish trend is ending, the first indication is when you push down and you break a previous swing low. The next confirmation is when you make your way back up into the newly created fair value gap here. Okay, and that is a bearish fair value gap, so we'll make that red. After you push back up, you mitigate, okay, or close or fulfill this fair value gap. You fill that void in the market. You then start pushing down and you take out that previous swing low. Okay, that, as you may have guessed, is called a bearish break of structure. Okay, just like we had with the bullish side, that's the bearish side. Okay, it works just as well. Okay, so let me just go ahead and clean that up just a little bit. Now take note of where this came back to. Okay, it came back to a previous swing low. Okay, the reason that this is such a good indication of a reversal, that the trend is going to reverse, is because it does something different. It, instead of setting a continuous higher low like you saw here, okay, this is a perfect example, okay, instead of continuing to always set a higher high and a higher low, you ended up setting a lower low. That's your first indication that something is changing, okay, because it did something it did not do before. Okay, after that, when it pulls back up here into the fair value gap and then fails to set a new swing high, that's confirmation number 2. So where you want to take entry with a reversal like that is after you have failed to set, after the bulls have failed to set a new swing high, and that pushes down, you want to find a new fair value gap. And in that case, that's going to be right here. Okay? So let me go ahead and get rid of this one so that everyone can see this. This is really, really important stuff, guys. And actually, I'll get rid of that too. This is an order block. I'll get into that later. Don't worry about that for now. So now you've created this fair value gap and pushed down. You're looking for a reattack of the fair value gap. So your entry, and this is a short position entry, okay, meaning you're going to bet against the market. You want the price to go down, okay? So what you're going to do is you're going to, you can eyeball this for the most part. Anywhere in this red box territory is a good place to set your entry, okay? In this case, this was textbook. This was about 50% of that fair value gap, 40% or so, where the reattack happened, which is right about here. I'm actually way up on this trade. A lot more than I thought I was going to be, but I want to finish this thought because it's key. So what you would do is you would set your entry here inside the fair value gap. You would put your stop loss above liquidity. Preferably, make sure that your position size is small enough where you can stomach having your stop loss above the highest swing high, okay, which means that you are going to have to do a real-time calculation of what allows you to have your stop loss this high and still be within your 2% risk tolerance, okay? So you're going to have to make an adjustment like that on the fly. It's something you're going to have to figure out, okay? But Once you do that and you have your entry, and immediately you're going to come up and you're going to set your stop loss. You're going to set it, you can eyeball this one. I don't recommend that you set it right anywhere inside of here. What you're looking for is something called an order block. Okay, the order block is going to be the candle that preceded the reversal. Okay, so that's there. Okay, understand that that's also going to be a point of interest, a strong point of interest, or a supply zone later. Okay, you want to put your stop loss above that order block. Okay, you then want to start sizing up targets. Now, the way that you do that is you are going to try to find previous swing lows. Okay, so here's one. Here's one. Here's one. And so on and so forth. Okay. You will then use that information to try to make a decision of where you're going to put your stop losses or where you're going to put your take profits. And it really is that simple. Okay. And then you wait. So as let's say you took that trade, which would have been an absolute sniper entry, by the way. You came up, you got your order filled, chopped around, started to push down. Maybe you took some profits. But before you take profit, your first goal, your first objective after entering your trade is not to take profit. It is to mitigate your loss. Okay? So as soon as it's appropriate, as soon as you get a couple of bearish breaks of structure back to the downside, you need to do whatever you can to get your trade to risk-free. Okay? That is absolutely critical. Okay? But don't rush it. And that takes practice, guys. I'm not going to lie. I still struggle with it. Every trader in the world still struggles with it. Like it's not an exact science. It's something you're just going to have to kind of feel, unfortunately. So, all right. And after that, you would hopefully your trade is going to be successful, or it's not going to be successful. Just make sure that you are, accepting your losses. That is doing quite well at the moment. Okay, so here's a good example. I went ahead and took this trade here. And when I did, I believe it was somewhere in here. Yeah, it was still consolidating in there. So look what it ended up doing. It was an absolutely textbook push up, new high. Okay, high or low. Bullish break of structure, confirmation. Pushes up, sets a new swing high here, pulls back to this 9 exponential moving average on the 1 minute time frame. So now it will be a strong indication that we are going to get continuation to the upside if I can get an additional bullish break of structure. Now, what I will say is that has filled that fair value gap. That is done. So that's outstanding. Okay, so that's the continuation that I'm looking for. So this is me doing exactly what I just said in real time. I'm now going to take my stop loss, which is in a pretty nice profit right now. And I'm going to go ahead and I'm going to stick this right underneath this little 1 minute candle wick. So this trade is up $35 at the moment. So I've locked in approximately $20, $25. Big deal, right? Well, if I do that, there's a couple of really cool elements here to this strategy. Number one, yes, when you first start, you're going to be having a daily goal that is roughly, let's say it's 5%. Let's say it's 5% of your tradable balance. So if you're starting with a $500 balance, then your daily goal is going to be $25. Okay. Now, which means that you'd be very happy to take a trade that you make, $3 or $4 on. Okay. Also, side note, be careful of the fees. You have to learn to use limit orders whenever possible to minimize your fees, because Exchanges like it when you use limit orders because you create liquidity in the order book, and you are what's known as a market maker as opposed to a market taker. Okay, and that's pretty much universal across all exchanges. Fantastic. Okay, so what I'm looking for now is I want to see some decent continuation here. I'm actually going to move this up and take what I can off this trade. I'm going to stick it right underneath there because I want to milk every trade for as much as possible whenever possible. Particularly after a interaction with a strong area. Okay, now you remember I was talking to you about order blocks. This is the supply zone. Okay, this is a high point of interest. And what I mean by that is everybody that took a short position here has their stop loss somewhere up here, whether it be directly on the candle wick, which would be silly, but more likely something to the effect of this, 29,680, right around there, okay, depending on how big they go. But it's a pretty strong possibility that this area here is going to have a lot of liquidity. That is a liquidity pool that will be targeted by banks, by large institutional investors, by algorithmic traders, which is 90 or 80% of the market. Basically supercomputers that are on Wall Street that trade all day long based on a certain set of given algorithmic parameters. Okay, you don't want to trade against them. You will lose, period. You want to trade with them, and that's why this strategy is so important. Okay, this is the strategy that they are using, and as of right now, it will give you a really, really good edge in these markets. Okay, so in any case, this is an extreme point of interest. Okay, because it's the swing high of this entire rally. Why did I stay in that trade? Oh, okay. There we go. I was like, wow. Okay, so that was a great trade. That was, let's see, $23. $23 when I'm risking, that's 2 to 1. My risk was 13. So, it's roughly a 2 to 1. And that's, a perfect risk reward ratio. This is having a nice consolidation. So I am looking for that bullish break of structure, which I do believe is coming. Yeah. Okay, so we went ahead and took that trade. Step 2, stop loss. You got to be Johnny on the spot with it too. You got to be quick. Okay, it's getting a nice push. So now I want this to perform something called a bullish break of structure. It's competing with 2 order blocks though. It's competing with this one here. We might as well just call it this whole area right here, because that whole area is kind of a nightmare. There is a small fair value gap to the left here, but it's, I don't know, I feel like it's kind of inconsequential. The order block is much more important up here. Okay, definitely some resistance happening at 29,580. Going to need to see that get broken. One small thing on order blocks, ladies and gentlemen, they are one use only. When they get tapped and they get broken, they are worthless. They will no longer, think of, they're single serving use. Once the price breaks through them, either up or down, they are worthless after that. Okay. They may, there are traders that aren't aware of that will still try to use broken order blocks. That's not going to be you. That's not you. That's not how we're doing it in the Menace Militia, guys. You're not going to do that. Understand that if, for example, I'll give you a good example. If this price were to come up here and even just for a moment pierce through the top of that order block is smoked. Okay? You cannot trust it. You cannot rely on it to be support later. You cannot rely on it to be resistance when it comes back up. It's smoked, okay? So that's very, very important. I want to make sure that that's being impressed on you guys. Okay, so I mentioned to you guys before, understanding how retail traders trade. The majority of retail traders are going to see this pattern here, and they're going to probably be thinking something along the lines of a ascending triangle, which I mean, it is putting in an ascending triangle. Now, everybody who's taking trades in here is going to be putting their stop losses right about here at this previous swing low. That's not you. Instead, you are going to put it down here on this order block, okay? And the reason that you would do that, now I want to preference that with saying that this trade is actually kind of risky. And the reason that it's risky is because there is an unmitigated fair value gap directly below it. So do not try to like grab your stop loss and bring it down here. Okay, that is an incorrect trade. All right, plus it's going to violate your risk tolerance. So instead, take your L up front in the event that it happens, allow the fair value gap to get filled, or use it for entry, which you could easily do right here. Okay, so in the event that this comes down and stops, then I would be looking, well, I actually don't think I would take a trade on that, to be honest with you, because there is still an additional fair value gap to the downside here. This one is partially mitigated. This one is fully unmitigated. So there is a good reason for that to pull back. Okay. Now note, about to take a $12 loss on this trade, right? Any second. Waiting for the ding. There it is. Okay. So that right there is liquidity getting taken. All right. So now I'm going to start sizing up areas that this price is likely to retrace to. Number one is going to be that fair value gap getting supported on the market structure, or excuse me, the previous bullish break of structure, which also actually, to be very fair and more accurate, that is the better bullish break of structure because it is a much more prominent swing high. Okay, so this right here has been voided. Really thought that was going to get the break. I'm surprised. Let's see. Looking for a pullback here. So I'm going to go ahead and I'm going to put my entry. Wow. Okay, this one's kind of tough because this order block here, this little order block here is small. It's very small, very unlikely to hold. There's not a lot of real estate for the price to travel. Once it touches it, it pretty much has broken it. This is a perfect setup for something called a breaker block. Now, I can also see that since we bottomed down here at about 29,335, we've been putting in a nice trend line to the upside. So I'm going to go ahead and extend that over, because I think that there are too many fair value gaps to the downside for this to get the continuation now. However, if that price pushes down, it's going to close that, and it will try to re-solidify, let's assume that's a word, that order block right there, okay? Or, excuse me, technically, I mean, yes, that's an order block, but this is actually the better one right here. Because this is the candle, and I'll zoom right in on that. This is the candle right here that preceded a strong move to the upside. That is the order block that I would be looking to keep my stop loss underneath, especially because this fair value gap over here has been partially mitigated with this wick down. And you could even argue that it is fully mitigated if you're using a 3-minute chart. Okay, so here comes the push down. Go ahead and get rid of that. So I am a smart trader, sort of. I try to be. And I know that there's going to be hesitation there. But really the one that I want is here. I think the trend line is going to get touched on this one because it's kind of overextended. Certainly rolling over, very toppy looking. That's definitely kind of a triple top. So, we might get one more retest here and then a push down. So what I want to do is I want to be ready to go. So I can see probably 29.5 is going to be the place to get this one. So 29,500.7. And I'm going to have that order ready to go. And you can see that it instantly populates on my screen here with a little flag. Okay. I'm also going to prepare my stop loss at 471.5. And as soon as this order triggers, assuming that it does, and I believe this is going to end up becoming a breaker block, by the way. A breaker block is a previous order block that the price disrespects. So if this price pushes right down through this little blue box territory here, this order block, then it will probably get the continuation down to the trend line. If not, and it ends up holding, then I will use it as a stop loss for an entry at a higher point. Okay. My guess is this is probably, if it doesn't immediately push through, let's say it gets a tiny little bounce here, probably going to come up and test this trend line here. And a lot of traders are going to get tricked into taking a short position on this reattack here or even here. That is not confirmed. Okay, that is not a confirmation. This is one of the trickiest things to learn is what order blocks can be trusted and what constitutes a reversal. So it looks like it's too early to tell, but this, in my opinion, is probably going to push up here at some point and try and fill that fair value gap if it gets supported here. If not, I am very well positioned with my order ready to go inside of the fair value gap created here. My stop loss will be 29,472, which is within my risk tolerance. And my target is going to be the point of interest actually up here, believe it or not. Because I think the banks are going to target this liquidity at 29,680. So that's going to be my initial target. So that actually gives me a 6-to-1 risk reward, which is fantastic. Okay, there is trying to hold support over that order block. It actually hasn't even been tested yet officially. Let me go ahead and get rid of this because it's kind of distracting. And we are going to hopefully see this. The ideal trade here, there it is. I did a little bit of a reattack into the fair value gap here. People are going to be going short here. And that is a mistake to go short here. Now, it may pay off for them, but it is a fundamentally unsound trade. And the reason for that is because they are assuming that this trend has fully reversed, and it hasn't. This trend is not reversed until it takes out a key swing low, which is going to be down here at 29,420. That's when you can say that a swing low has been taken in a strong way. Now, I'm not saying you can't short up here because you can do a quick trade, but the safer trade, the more fundamentally sound trade, would be to wait for a short position, wait for the price to take out this significant swing low. Okay, and at that point, you would be looking for a fair value gap for re-entry or for entry to take a short position. Okay. Also, pay attention to the moving averages. The two most important moving averages, as far as exponential moving averages are concerned, which is the ones that you guys are probably going to want to use, are the 9, which is this white one here, and the 21. When at least with Bitcoin, when Bitcoin is very bullish, you can see it will dance and bounce on those two moving averages as it pushes up. The same is true as it pushes down. So I can see that the 9 exponential moving average, which is the little white line here, which is a more light, a less heavily weighted moving average. It moves easier because it only takes 9 candles in order to move it, as opposed to the yellow one, which takes 21. These are the two most common exponential moving averages used by traders today. Okay, so here is the entry into the fair value gap. And you can see the price interaction on those moving averages. They will help you. They will help you determine momentum. They will help you determine trend. And they will be very helpful, particularly during extremely volatile times, because the price loves to bounce on those two moving averages, okay? And you can actually see that if I switch to a 3-minute chart, yeah, you can see that we're contending with the 9 exponential moving average on the 3-minute chart. And when it pulls back, it also is getting good interaction on the 21 exponential. I'm actually going to go ahead and take this below that, looking to see that fair value gap hold. Otherwise, if this fair value gap gets disrespected and immediately closed, then I think it's probably pretty likely that we're going to get a reattempt of this swing high here. I put it at about 60% chance, though, that it holds and pushes the price down and fills our order. And remember, I have an order right here at $29,500.70 waiting to go. Okay, I did that because I think there'll probably be some hesitation on the trend line. And there's also, that's about 50% of this fair value gap, okay, which is, I'll go ahead and draw out here. And that's a bullish fair value gap, meaning that the price was bullish that created it, okay? All right, that's getting supported on the bottom of the fair value gap at the moment. Okay, you look like you are probably, if that closes the fair value gap, I will adjust my strategy here, and I will take entry trying to catch the move up, because that would be decent support, and this did not, as of right now, turn into a breaker block. There's still time, though. I will not adjust my trade until I see this fair value gap get closed, and preferably when I see this order block here get smoked. That looks like it's going to. I think the fair value gap is going to mitigate. I think it's going to be closed. There's a lot of buying pressure there. So now I'm going to focus on the order block, which is right here, the candle that preceded the move. And when that breaks, essentially when this becomes the new breaker block, if the price gets above it, it'll smoke that order block. There's a very good chance that we get a push up at that point. And at that point, I will bring my trade up to here. So there's the test of the order block, that fair value gap, which the top of it was at the bottom of this order block, is closed. I have not gotten the continuation on it, though. I believe I'm about to. I'm going to go ahead and cancel this order, and I'm going to prepare my new one. Yeah, that fair value gap has been mitigated. There it is. Bang. I will take entry. That order block has also been smoked. That's out of here. Let's go. Stop loss. 29,526. Get it in, get it in. Bang. There we go. All right. So that's going to be for 44% of a Bitcoin at 29.2. So I'm within my 2% risk tolerance. And we are moving right along. So a good indication that I am going to get the continuation I'm looking for is if we are able to take out this, this level of resistance here. Okay. Now again, understand Every time this came up here and got rejected, that means that people are taking short positions against it, which also means that there is a lot of stop losses right here in this range. Now, what's cool about that is, if you remember, I have another, I'll go ahead and make this one yellow, okay? I have another point of interest, another order block here with the same kind of idea, okay? And that's going to be stemming from this move over here. Everyone who went short here, guess where they have stop losses? Right here. Which for some reason is not allowing me to... My goodness. Hang on 1 second, guys. Sorry. There we go. That's what I was trying to do. All right, so there's going to be a lot of stop losses right there in that range, which is great because that will hopefully pull the price straight up and attack the stop losses that are going to be right in this range. And it will have kind of a domino cascading effect that will allow, hopefully will just drive that price right up. That was a major pullback that we had from that swing high. Let me zoom out on that a little bit. That swing high was a very, very important pullback that pulled back to a very, very important zone. And the zone that it pulled back to, if you guys have ever watched any one of my videos, is the inverse golden pocket and got supported. That means that the trend has cooled off and is now ready to resume, or at least is likely to resume. That's why you're starting to see the price rise back up, because of where that got supported. Okay, moving right along. Okay. It is not appropriate for me to mitigate yet. Excuse me. It is not appropriate for me to mitigate my loss yet. I do not have the separation here yet. Once I get that separation, and honestly, when this gets up to probably the bullish break of structure, the top of this little golden area here, right here, that's when I will mitigate to a risk-free trade. Okay, but not until then. I don't want to cheat myself just yet. Actually, what I will do, I will put it in a profit when it breaks here, but it's going to chop around there for a minute. Now, failing to set a new swing high here will be a strong indication that this will retrace back down. Now, if it ends up taking this swing low that it just created out, then at that point, that is confirmation of a trend reversal. Okay, so basically what that would look like is if we came up here and failed to take out that swing high there, and then we come down here and we successfully take out that swing low right there, I would be looking for a bounce here, hopefully some sort of a fair value gap in this range somewhere, and then I would take entry in a short position and hopefully get the continuation down at that point. Understanding price action, market structure, and who is in control is the difference between success and blowing an account. You master price action, you can trade any market, anywhere in the world, at any time. Okay, we are up 10 on the trade. I'm going to go ahead and make this risk-free with the test here, because this is an area where it is likely to reject. As a matter of fact, I'm actually going to lock in just a little bit here, just to make sure that, technically it's still a break-even, because I have a $1.30 fee in, and I assume I'm going to have a $1.30 fee out as well. So my trade will neutralize those. If I get stopped here, my trade will neutralize those. This move, by the way, is not efficient. And what I mean by that, and this is actually really important for you guys to understand too, when Bitcoin is moving, or when any market is moving, I don't want to see violent pushes like this. What I want to see is, I don't want to call it chop either. That's not the right word. I want to see Bitcoin mitigate its own fair value gaps as it pushes up. And a good example of that is right here. Okay, so Bitcoin pushed up, it created a implied fair value gap, and then it came back down and filled it. Okay, same thing here, a new one, but then it came down and filled it. But it did not do that here, which means there is a reason for that price to retrace. Okay, but we are getting a nice bullish break of structure right there, and we have entered that supply zone. Watch what happens when we get up here. I will start to lock in some profit, because this is an area where it is very likely to reject, and that's going to be, roughly $15 as of right now. We're up about 17 on the trade. I'll do my best to keep this in view for you guys too, because I want you to see it. All right. Chopping around. This is a supply zone, guys. This is an area that previously got rejected. Now there are, okay, so we went ahead and got stopped there. That's fine. But it is a higher high, and that's probably going to have a very quick reattack, I would imagine, because of where it is. So I will prepare another order. And I'm going to do it right there, as close to that as I can get. I don't really have time to set a limit. One more little push. It's testing this order block right here. Okay. There we go. Okay, so it's a decent entry, but I want to get this stop loss in place right away. 951. Okay. I'm going to actually move the stop loss up to this order block here, because I think that this one has a high probability of reversal, but I want to see this order block hold. I'm not willing to try and have it. Remember, there's a huge imbalance right here that did not get corrected. So it's possible that this price will come back down to find it. Okay, but hopefully that doesn't happen. Hopefully I end up getting a nice move back up and I get an additional bullish break of structure. Now, if that happens, pay attention to the volatility of the price when it breaks that top. I imagine it will be a very quick, if it gets the continuation, it'll be a sharp move, okay, followed quickly by a stutter, but if it gets here, it'll explode. Looking for that nice continuation, the bullish break of structure. There it is, bang. Even if it just wicks above it, it's a higher high, and it counts. And we're approaching that area. We're up 11 on this trade, so I will go ahead and I will put this here below the previous break of structure. There's going to be a lot of sell orders up here as well. This order block is smoked. No longer relevant. This smoked. Bye. Moving this up. And I believe that is, yep. Let's go ahead and get rid of that. Okay. Look at that volatility, guys. Look at it. So we are up 26 on this trade. I am not leaving that on the table. I will re-enter if I have to. That's a nice trade right there. And that's how you can do this, guys. Just over and over and over again. We're stopped there. It's like $20. It's beautiful. I'm going to hold off on taking another trade just yet, because this is an area where it is very likely to reject. It is the most extreme point of interest. And this order block has not been fully mitigated yet. It will not be considered such until it's here. I will be on the lookout for a short opportunity because it entered here. And I guarantee you a lot of people are taking shorts here. That's as much as I'm gonna break down for you guys today. But I wanted you to understand that this is where my head is. Started with $500 today, this morning, and we are at 685 to go ahead and close that. I will probably take more trades throughout the day. As I do, I'll make new videos. If you guys have questions, please let me know. I know a lot of you guys are DMing me like crazy, asking me, where you should start. And I'm going to do whatever I can to help you guys do that. Oh, hang on. I may not want to end this video just yet. That is a real nice touch of that moving average. That mitigated that fair value gap, but it did not. Okay, that's fine. This order block seems to have held. I'm not going to take this trade. You said it's too dangerous, but yeah, that's going to be it for this video, guys. I hope you guys learned something. I hope you guys are enjoying this content. If you have not done so already, I would really appreciate a like and subscribe. It helps the YouTube algorithm recognize the Market Menace Trading YouTube channel and will push it out to the world, okay? I want to grow this community, and I want to grow with you. I want you to grow with me. If you guys need anything from me, please leave me a comment in the comment section, or you can DM me. Many of you have contact with me personally, but if not, it's okay. Let me know what your guys' questions are, and I will do whatever I can to help you on this journey, because it is a difficult road, but it is an extremely rewarding road. Okay? Life-changing, hopefully, but discipline is everything. All right, guys, that's going to be it for me. I will see you guys in the next episode. Take care.
1